Hi, this is Sharekhan here from the Currency Advisory Desk with today's report. Well, we have the Eurozone current account number, which came in at a surplus of 18.71 billion euros versus an expectation of 14.3 billion euros. What we are witnessing in the Eurozone is that the surplus is coming in strong from Germany and the other core countries as compared to the peripheral countries like Portugal or Greece, wherein we are seeing trade deficits being run there. So this sort of number balances due to Germany's strong current account surplus, and that's the trend what will follow on in the markets in the coming few days also. Now, looking at the G20 meetings which were concluded last Sunday, well, we had diverging monetary policies which were at the center stage for this particular event. In fact, the US Treasury Secretary, Mr. Jack Lew, explicitly stated that the ineffectiveness of monetary policies in EU and Japan is what is causing global growth to take a backseat. If we see Japanese and European, the Eurozone policies as such have been dragging the economies, and they're not beneficial for the Eurozone or Japanese markets as such. So that phenomenon is what Mr. Jack Lew was talking about, and he stated that the Eurozone has to follow US's model of reviving the markets by increasing the quantitative easing. Now, in the Eurozone, Germany is against further quantitative easing. They do not want more quantitative easing to happen in their markets, and this is what is causing a drag on the entire Eurozone economies per se. We also saw the JP Morgan G7 Volatility Index. It rose to a high of 8.08 this month, a level unseen since February. We expect the volatility index to move higher, primarily on the basis of the divergence in monetary policies of these two economies. Looking at our markets, well, the Indian rupee spot closed at 60.8182 versus the previous close of 60.8384. So though on the closing there was not much of a divergence, however, intraday there was a huge movement in the Indian rupee dollar pair on Friday. Now, amongst the macro data, we didn't have anything much from the fundamental front in our country. However, the Chinese president's visit has brought a lot of optimism with respect to FDI inflows in the country. I mean, there are a lot of MOUs which have been signed, a lot of agreements which have been gone through, which we expect that FDI will flow in our country. In fact, just to cite, there was an MOU that was signed between China and India, wherein the Guangzhou city in China and Ahmedabad are to be considered as sister cities, and there will be a lot of bilateral trade happening between them. So these are all in all positive for the Indian economy, but however we will see the effects of this happening over a period of time. Now, some of the major events to watch out for during the week would be the coal allocation issue that comes up, and also the gas price decision which is due later this week. Besides this, we don't have anything much domestically to move the markets. Now, the dollar rupee NDF is quoting at 60.83, which is down by negative 0.14%, and the dollar index is at 84.74, which is down by negative 0.23%. Looking at the future levels for the technical contracts, well, the dollar rupee futures contract closed at 60.89. We are bullish on all the G4 currencies against the Indian rupee, and we expect them to move up. However, the market trend for today would be a bit slightly bearish to somewhat flat. We won't see much of a movement happening. Even though Asia is down, we expect some sort of level to be maintained in the dollar rupee market in India. Amongst the major events to watch out for, you've got ECB President Draghi's speech, followed by the Eurozone consumer confidence number, and lastly we'll be getting the US existing home sales number. Well, that's it from the Currency Advisory Desk. Thank you.